Assalamualaikum. We are from Group 3. We will present about audit of cash balance, which is from Chapter 23. So, my name Muhammad Azriza Amri. I will presenting about learning objective 1, which is show the relationship of the cash in the bank to the various transaction cycles. Based on this figure, it shows the relationship of the various transaction cycles, and the focal point is general cash account, which is cash in bank. So it's apparent why the general cash account is considered significant in almost all audit. So even when the ending balance is immaterial, the amount of cash flowing into an outflow of the cash account is often larger than the other accounts in financial statements. So in this part, there are several misstatements which may not be discovered as a part of the audit of the bank reconciliation, which is failure to bill a customer and advancement of cash received from customer, and duplicate payments, improper payments of personal expenses, payment for raw material not received, payment to employee for hours not worked, payment for excessive interest to related party. There are different types of misstatement which are normally discovered as a part of the test of bank reconciliations. So this include failure to include a check on the outstanding checklist, cash received by the client recorded in wrong period, a deposit recorded near year end, deposit in the bank in the same month, and include in the bank reconciliation as a deposit in transit. And the last one is the payment on notes payable debited directly to the bank balance but not entered in the client records. So we move to the part learning objective 2, which is identify the major type of cash accounts maintained by business entities. So there are various types of cash account, which is general cash accounts. So the general cash account is the focal point of cash for most organizations because it virtually all cash receipt and disbursement flow through this account. For example, the disbursement of the acquisitions and payment cycle are normally paid from this account, while the receipt of cash in the sale and collection cycle are deposited in the account. We move to another type of cash account, which is imprest accounts. A fixed balance is maintained in the imprest payroll bank account. Immediately before each pay period, one check is drawn on the general cash account to be fund the net payroll paid from the payroll account. Another one is branch bank account. So for a company which is operating in multiple locations, it often desirable to a company to have a separate bank balance at each location. So branch bank account is build local relation and permit the centralizations of operation as excess cash is predictably transferred electronically to the main office general bank account. So we move to the impressed petty cash funds. M petty cash fund is not a bank account, but it is sufficiently similar to the cash in bank to merit inclusions. Petty cash band is simple as amount preset amounts of cash set aside in a cash box for accidentally expenses. So it used for a small cash acquisition that can be paid more conveniently and quickly by the cash rather than check. So we move to the last one is cash equivalents. So company will often invest excess cash in the short term, highly liquid cash equivalents. So this may include in the times deposit, certificates of deposits, and the last one in money market funds. So on this figure, it shows the relationship of general cash to other cash account. All cash either originates from or it deposit in general cash. So for the remainder, on the chapter, the focus is on auditing in three types of account, which is general cash accounts, impress payroll account, and the last one in impress petty cash funds.
So my name is Nova Ezrina. So I'm going to present about the design and perform audit test of the general cash account. In testing the year-end balance in the general cash account, the auditor must accumulate sufficient apparent evidence to evaluate whether cash, as stated on the balance sheet, is fairly stated and properly disclosed in accordance with 5 of the 8 balance related audit objectives used for all the tests of details of balance, such as existence, completeness, accuracy, cut-off, and detail tie-in. There are three elements in phase 1. So first is identify client business risk affecting cash. So most companies are unlikely to have significant client business risk affecting cash balance. However, clients' business risk may arise from inappropriate cash management policy or handling of funds held in trust for others. Client business risk is more likely to arise from cash equivalents and other types of investments. The auditor should understand the risk from the client's investment policy and strategies, as well as management control that mitigate this risk. Second one is the set performance materiality and assess inherent risk. The cash balance is not material on many audits, but cash transactions affecting the balance are almost always extremely material. Therefore, the potential often exists for material misstatement of cash. Because cash is more susceptible to theft than other assets, there is high inherent risk for the existence, completeness, and accuracy objective. These objectives are usually the focus in auditing cash balance, and the auditor may conclude that risks to this objective are significant risks. Typically, inherent risk is low for all other objectives. Internal controls over year-end cash balance in the general account can be divided into two categories. First is control over the transaction cycles affecting the recording of cash receipt and disbursement. Second one is the independent bank reconciliations control affecting the recording of cash transactions, which are essentially assessing the recording of cash transaction, assessing the control risk for cash. For example, in the acquisition and payment cycle, major control includes adequate segregation of duties between the check signing and accounts payable function, signing of checks only by a properly authorized person, use of pre-number checks printed on special paper, careful review of supporting documents by the check signer before checks are signed, and adequate internal verifications. Monthly bank reconciliation of the general bank account on a timely basis by someone independent of the handling of recording of cash received and disbursement is an essential control over the ending cash balance. The person performing the bank reconciliation may have read-only access to the online bank account information to complete the reconciliations. A careful bank reconciliation by a computer client personnel includes the following action, such as compare, cancel, check or electronic bank records of payment with the cash disbursement record for dates, payee and amount. Second is examine cancel check or electronic bank records of payment for signature, endorsement and cancellations. Then compare deposit in the bank with recorded cash received for date, customer and amount. Most accounting software package incorporate bank reconciliation as a part of an end of month procedure and others. So the second phase have only one, which is design and perform test of control and subsystem test of transaction for several cycles. So the audited test of the accuracy of monetary amounts of transactions and account balance are known as substantive testing. The three types of substantive tests are analytical procedure, a test of details of transaction, and test of details of balance. Because of the cash balance is affected by all other circle asset inventory and warehousing, an extremely large number of transactions affect cash. So in several earlier chapters, we discuss in details the appropriate test of control and substantive test of transaction for the audit of each circle. For the for example, control of transaction, control over cash received, and control over cash disbursement. Cash transactions are audited through this transaction circle test. And third phase have two. So first one is the design and perform subsystem analytical procedure. In many audits, the year-end bank reconciliations is extensively audited. Using a substantive analytical procedure to test the reasonableness of the cash balance is therefore less important than its most other audit areas. Auditors commonly compare the ending balance um, on the bank reconciliations, deposit in transits, outstanding checks, and other reconciling items with the prior reconciliations. So we see the figure for Clausen Industries valid reconciliations at 31 of December 2016. So from the balance per bank is 109713, add up by the deposit in transit, and then deduct the outstanding checks. So deduct also by other reconciling item, that is bank error, deposit for another bank customer credited, so to general account by bank in error. So get the answer for the balance per bank adjusted. After that, balance per books before adjustment, minus with the adjustment unrecorded bank service charge, non-sufficient fund check written by bank, not collectible from customer. So we'll get the balance per books adjusted. Both will get a balance. So next, I will pass to next presenter for the test of details of balance objective. Thank you. That's all from me.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Faisal Zulkifli. Today I am going to present a little bit about balance related audit objectives. Okay, let's start. Okay, there are 5 of them in balance related audit objectives, and the first one is detail tie-in. Okay, detail tie-in is basically a cash in the bank as stated on the reconciliation, foots correctly and agrees with the general ledger. Okay, next is for the existence. Okay, existence is the cash in the bank as stated on the reconciliation exists. Okay, next is completeness. Completeness is basically existing cash in the bank is recorded. Okay, next is accuracy. Okay, accuracy is the cash in the bank as stated on the reconciliation is accurate. Okay, last but not least for balance related audit objective is cut off. Okay, cut off is the cash receipts and cash disbursements transactions are recorded in the proper period. Okay, next slide. Okay, is for the common test of details of balance procedures. Okay, there are 5 of them, which is explain a little bit about the balance related audit objectives. Okay, the first one is detail tie-in. Okay, detail tie-in test of details is the foot the outstanding check and electronic payment list and deposits in transactions. Okay, next is for existence. Okay, the test of details uh, for this existence is receipt and test of a bank confirmations. Next is completeness. Okay, test of the bank reconciliation. Okay, next is for accuracy. Okay, the test is test of kiting. Okay, last but not least is for the cut off, which is count the cash on hand on the last day of the year and subsequent trace to deposits in transit and the cash receipt journal. Okay, next slide is for the procedures. Okay, for the procedures, there are 3 procedures in this topic. Okay, the first one is for the bank confirmations, and then to cut off bank statement and bank reconciliation. Okay, what is bank confirmation? Okay, bank confirmations are often sent electronically, and some banks will only respond to confirmation requests sent electronically through a designated third-party intermediary. Okay, next for the cut-off bank statement. Okay, cut-off bank statement is a partial period bank statement and the related copies of cancelled check, duplicate deposit slip, and other documents included in the bank statement mailed by the bank directly to the CPA firm's office. Okay, last but not least is bank reconciliation. Okay, bank reconciliation. Okay, the procedures is like uh, the auditor use information in the cut-off bank statement to verify the appropriateness of reconciling items. Okay, the auditor's verification of the reconciliation involves several procedures, and there are 4 of them. Okay, the first one is to verify the client's bank reconciliation is mathematically accurate. Next, trace the balance on the bank confirmation and or the beginning balance of the cut-off statement to the balance per bank on the bank reconciliation to ensure they are the same. Okay, next, trace check trace checks written and recorded before year end and included with the cut-off bank statement to the list of outstanding checks on the balance reconciliation and to the bank disbursement journal in the period prior to the balance sheet date. Okay, last but not least is investigate all significant check included on the outstanding check list that have not cleared the bank on the cut-off statement. Okay, next is the importance of the procedures, which involve the three things I did said just now. Okay, the first one is bank confirmation. Okay, bank confirmation is to provide independent evidence regarding the reliability of the client's records. The bank confirmation in the audit extends beyond the verification of the actual cash balance. Okay, next is for the cut-off bank statement. Okay, the importance is to verify the reconciling items on the client's year-end bank reconciliation with the evidence that is not accessible to the client. Okay, last but not least is bank reconciliation, which is to determine whether client personnel have carefully prepared the bank reconciliation and to verify whether the client's recorded bank balance is the same amount as the actual cash in the bank, except for deposits in transit, outstanding checks, and other reconciling items. Okay, this is for the last one for my presentation, which is the types of audit tests used for general cash in the bank. Okay, as stated in the cash in bank T account, okay, for the beginning balance, which is cash receipt, will be audited by TOCT, which is the test of controls in transaction cycles, and STOT, which is the substantive test of transactions, and also by the AP, which is the analytical procedures. Okay, for the cash disbursement will be audited by TOCT, which is the test of control in transaction cycles, and also with STOT and also AP. Okay, for the ending balance will be audited by TOCB, which is the test of control over bank reconciliation process, and AP, which is analytical procedures, and TDB, which is the test of details of balance. Okay, to include all these five tests of control, the the result will be sufficient for appropriate evidence, which is uh, the complete audit test used for general cash in the bank. Okay, and this figure illustrate how the type the type audit tests are used to determine uh, uh, and be used by the audit to audit the general cash account. Okay, I think that's all from me. Thank you.
Assalamualaikum. My name is Fatih Alan Rani. So I will present on learning objective 4, which is when to recognize to extend audit test of the general cash account to test further for material fraud. Okay, fraud-oriented procedure. Fraud-oriented procedure is must be done by audit for if they suspect of its statement. A major consideration in the audit of the general cash balance is the possibility of fraud. So, the auditor must to extend the procedure in the audit of year-end cash to determine the possibility of a material fraud when there are have an inadequate internal control or they have an lack on the independently prepared monthly bank reconciliation. So under this fraud-oriented procedure, they have three methods, which is extended test of the bank reconciliation, proof of cash, and test of interbank transfer. Okay, first is extended test of the bank reconciliation. When the auditor believes that the year-end bank reconciliation may be internationally misstated, it is appropriate to perform extended test of the year-end bank reconciliation, which means the extended procedure must verify whether all the transactions in the journal for the month of the year were included correctly or not, and it is necessary to double-check that all the things in the bank reconciliation were correct. Okay, under this test of the bank reconciliation, they have four tests: material internal control, weaknesses, and the client year and 31st December. First is, they must to start with the bank reconciliation for the month of November, and they need to compare all reconciling item with cancelled check and other document in the month of November bank statement. Then, they need to compare all the remaining cancelled check and deposit slip in December bank statement. After that, they need to trace all uncleared item in the bank November bank reconciliation, cash disbursement, and receipt journal to the client. And the auditor must make sure that they are included. Last is they need to verify all the reconciling item in 31st December in the bank reconciliation, which means from November bank reconciliation and December journal that has not clear yet. Okay, second is proof of cash. Proof of cash is sometimes the auditor prepare when the client has the material internal control witness in cash. So, the auditor use proof of cash to determine whether all the recorded cash receipt were deposited or not, all the deposit in the bank were recorded in the accounting record, and all record cash disbursement were paid by the bank, and last is all the amount that were paid by the bank were recorded or not. Okay, let's move on to the proof of cash schedule. As you can see, this is the proof of cash schedule. This schedule has 4 columns, proof of cash, and 1 column for each of the 4 types of information listed. And it can be performed for 1 or more interim month and the entire year, or the last month of the year. And the auditor must focus on reconciling the amount recorded in the bank statement. And the balance per bank must be the same with the balance per book. Okay. Proof of cash also have 4 reconciliation types. First is, they must reconcile the balance on the bank statement with the general ledger balance at the beginning of the proof of the cash period. Second is, they must to reconcile cash receipt deposit per bank with the cash receipt journal for a given period. Next is, they must to cancel check clearing the bank with those recorded in the cash disbursement journal for a given period. The last is, they must to reconcile the balance on the bank statement with the general ledger balance at the end of the proof of cash period. So that's all from me. I will pass to the next presenter.
Hi, my name is Siti Sabaria and I'm going to explain regarding the interbank transfers. So interbank transfers is when embezzlers occasionally cover a theft of cash by a practice known as kitting. So kitting is transferring money from one bank to another and incorrectly recording the transaction. Near the balance sheet date, a check is drawn on one bank account and immediately deposited in a second account for the credit before the end of the accounting period. So check is drawn on one bank account and immediately deposited in a second account for credit before the accounting period near the balance sheet date. So in making this transfer, the embezzler is careful to make sure the check is deposited at a late enough date so that it does not clear the first bank until after the end of the period. If the interbank transfer is not recorded until after the balance sheet date, the amount of the transfer is recorded as an asset in both banks. So this fraud of interbank transfers is committed by many ways, but each involves increasing the bank balance to cover shortage by the use of interbank transfers. Okay, in order to test for interbank transfers fraud, auditors can list all the interbank transfers made a few days before and after the balance sheet date and trace each of the accounting records for proper recording. So there are also other several things that should be audited on interbank transfer schedule. First is the accuracy of the information on the interbank transfer schedule should be verified. Auditors should compare the disbursement and receipt information on the schedule to the cash disbursements and cash receipts records to make sure it is accurate. So cash disbursements and receipts records should be examined to make sure all transfers a few days before and after the balance sheet date have been included on the schedule. Second, the interbank transfers must be recorded in both the receiving and disbursing banks. For example, if there was a 10,000 ringgit transfer from bank A to bank B, but only the disbursement was recorded, this is evidence of an attempt to conceal a cash theft. The third one is the date of the recording of the disbursements and receipts for each transfer must be in the same fiscal year. If a cash receipt was recorded in the current fiscal year and the disbursement in the subsequent fiscal year, it may be an attempt to cover a cash shortage. Fourth, disbursements on the interbank transfer schedule should be correctly included in or excluded from year-end bank reconciliation as outstanding checks. Understatement of outstanding checks on the bank reconciliation indicates the possibility of cheating. Fifth, receipts on the interbank transfer schedule should be correctly included in or excluded from year-end bank reconciliations as deposits in transit. Overstating deposits in transit on the bank reconciliation indicates the possibility of cheating. Okay, this is one of the example of interbank transfer schedule. In this figure, the date 31st December 2013 bank reconciliations for the savings and payroll accounts should indicate a deposit in transit for the third transfer but not for the other three. Okay, next I'm going to explain regarding the learning objective 5 of this chapter, which is the design and perform audit test of the Impress payroll bank account. Impress is a fund used by a business for small items of expenditure and restored to a fixed amount periodically. Test of payroll bank reconciliation should take only a few minutes if there is an Impress payroll account and an independent reconciliation of the bank account, such as that described for the general account. An audit of the Impress payroll bank account, typically the only reconciling items are outstanding checks. In testing the payroll bank account balances, auditors must obtain the bank reconciliation, a bank confirmation, and a cut-off bank statement. Tests of outstanding checks are normally limited to a reasonableness test. Extended procedures are necessary if the controls are inadequate or if the bank account does not reconcile with the general ledger Impress cash balance. Next is the learning objective 6, which is to design and perform audit tests of Impress petty cash. So petty cash is a unique account because it is often immaterial in amount, yet it is verified on many audits. The account is verified primarily because of the potential for embezzlement and the client's expectation of an audit review even when the amount is immaterial. So there are several internal controls over petty cash. The most important internal control for petty cash is the use of an Impress fund that is the responsibility of one individual. Petty cash funds should not be mingled with other receipts and the fund should be kept separate from all other activities. When a disbursement is made from petty cash, adequate internal controls requires a responsible official's approval on a pre-numbered petty cash form. When the petty cash balance runs low, a check payable to the petty cash custodian should be written on the general cash account for the reimbursement of petty cash. When auditors do tests on petty cash, the two most common procedures are first, to count the petty cash balance, and second, to carry out detailed tests of one or two reimbursement transactions to determine that they are properly supported. We are already done with the presentation of Chapter 23 of Audit of Cash Balances. Thank you.